Whether you're looking to move here to the Denver metro area or you're already here in the Denver metro area and stumbled upon this video looking at real estate topics, well, stick around because today we have a great panel here. We are bringing on the whole Roots Home Sales team. And if you've been on this channel for a while, you know that it's mainly been myself, Robin Gerlach, and Reed Puser doing a lot of these videos. And we've been able to twist the arms of Dale Becker and Travis Carey to get on the channel with us and impart some of their wisdom. And so today we're gonna be doing 12 5-minute topics, all hot button topics of the real estate industry. And each of us are gonna have a go at it, and we'll open it up for a little bit of conversation as well. But these are all topics that you're seeing in the news, and we're gonna give you the insider perspective of what it's like for a real estate agent here in the Denver metro area. So let's go ahead and get into it right now. So today, again, we're going to be getting into these topics, but let's start by introducing our panel here today. And let's go ahead and start with you, Reed.
All right, so I'm Reed Puser. I've been a licensed real estate agent for the last 15 years. Helped hundreds of clients buy and sell all different kinds of properties, you know, starter homes, move-up homes, you know, empty nesters getting a smaller home, that kind of thing. And my wife Elizabeth and I have done almost everything there is to do in terms of investment on the real estate side of things as well. We flipped, you know, done BRRRR strategy, of course. We own a short-term rental. So I grew up in a real estate family, Colorado native, and yeah, that's me.
And I'm Robin Gerlach, and I got into this industry because of this guy right here, Reed Puser, recruited me into the industry in 2017. And we both grew up together in Salida, Colorado, so we were childhood friends. And I was running a tourism business at the time in South America, and he came down and said, hey, why don't you come and get into real estate with me? And I never imagined getting into real estate. I thought it was for only folks who drove around Mercedes. And, you know, I just had a different perception of what a real estate agent was. And I came back and shadowed Reed in 2016 and saw that, oh, actually there is a lot of value in what a real estate agent does. And so I got my career started in 2017. And since then have helped over 125 clients all through the spectrum of land deals to $1 million homes and short sales and everything in between. I primarily work a lot with first-time home buyers and buyers, sellers who are moving up. That's been my main clientele.
My name is Travis Carey, and I'm originally from upstate New York. If we have any baseball fans out there, just outside of Cooperstown. And I moved here in 2008. I reluctantly bought my first house in 2012 and then fell in love with the process. So I bought numerous houses, did flips, investments throughout 2012 to 2022, and then decided that I should get my license because I keep getting questions about how do you buy, how do you sell, how do you renovate, and just decided I should probably officially get licensed and start working with people to help them to realize the same goals as what I had.
And I am Dale Becker. I am the old person in the group. I've been doing this 30 years. So I got my real estate license all the way back in 1994. Originally from the state that shall not be named with a C that borders the Pacific Ocean. I've been here the past 12 years. Much better here, guys. But I've helped over 500 clients during that time. And I really am privileged and honored to have been able to help so many people and be a part of this wonderful team. And yeah, a little bit of information about us as we jump into the topics today.
So Dale's going to be transitioning us. He's going to be our MC today. And so let's go ahead and get into it, Dale.
Let's get into the topics.
The state of the market. So we get this question a lot from our clients. And let's just zoom out. Let's talk about first seasonality. Typically, in our real estate market, we see about 90% of our appreciation between January and May every year. We see the supply of inventory or the houses for sale on our market start very low in January, and it kind of peaks out around July or August every year. Now, this year, we're seeing it a lot more pronounced. For example, per DMAR, Denver Metro Association of Realtors, between the months of May and June, we typically see housing inventory go up 7%. Now this year, we saw that go up 31%. So obviously we're seeing inventory increasing very steadily. And what about demand? So when we're talking about the housing market, you want to think, what's the supply, what's the demand? That's going to determine where the housing prices are going typically. So supply is increasing very rapidly right now. The demand is actually staying pretty steady compared to years past. It's just up. Pending listings in the month of May were up 4% from a year ago, while the actual active listings at month end were up over 50%. So we're seeing supply outpace demand at the current time. What does that mean for you? So if you're a home buyer, you will actually have a lot more opportunity this summer if you can afford it, right? Because the big challenge right now is the lack of affordability in our market. We have rates hovering over 7% for the last 6 months. When the market was going crazy during the pandemic, obviously rates were in the basically 2.75 to 4%. That was really stimulating this housing market. People were buying up second homes, third homes, and that is what kept that supply so low, and builders were not keeping up. So that is what catapulted us to 18-20% appreciation annually, which is just not sustainable. So today's first-time home buyers are facing the challenge of high rates, but also high prices. So something has to give here. And I think we're starting to see prices are going to start probably giving over the next couple months. I think it's reasonable to expect that we can see prices go down over the coming 6 months, basically between here and the end of the year. Now, that's pretty common seasonality-wise in our market that we can expect that. But I think we're going to see it a little bit more this year just because it's hard to expect the Fed making any changes to bring rates down from what we've been seeing over the last year with jobs numbers. They're really trying to get inflation down to 2%. And in order to do that, something's got to break. And so I do think that pricing will come down because supply is as high as it's been, with around 8,500 homes to 9,000 homes given on the week, depending on the week in our market. It hasn't been that high. The housing supply hasn't been that high in our market since 2019. Now, if COVID would have never happened, perhaps the market would have already kind of reset itself. But when COVID came, the stimulation policies of the Fed to kind of keep the economy afloat really shot the market up. And now we're feeling what we probably would have felt in 2020 if COVID never came. I think now we're starting to see that come through in 2024.
So my feeling on this is I think affordability drives everything. And if you look at the numbers right now, if you look at the median home price in Denver with the median income in the metro area, with a 20% down payment to service a mortgage at a median home price right now takes about 54% of median income. Underwriters, when they underwrite loans, obviously are looking for 36, 38, 40% front-end ratio. That affordability is the issue that's killing the market right now. And there are only 3 ways to fix it. Either wages have to go up, which takes time, prices have to come down, or rates have to come down. The most likely scenario is either rates coming down or prices coming down in the short term, but the market's not sustainable with 54% of income going towards making a house payment.
Right.
So
and that's why I think prices will probably be the first one to come down, just because of what the housing supply is doing. And I don't see demand. There is pent-up demand, but it seems like it's still waiting.
But part of the game here too is that you have a ton of demand on the sideline right now because people are simply priced out. If and when rates do come back down, you will see that demand come back into the market. So you might see something of a turbulent 6 or 12 months with some pretty abrupt price corrections. But long term, the buyers are coming back. We're out of time.
Oh, we hit our 5 minutes, and we're going to stick to
We're
our
sticking
5
to the
minutes
5 minutes.
because we have 11 topics to hit today.
Yeah.
So.
Yeah.
All right, let's go to our next topic. This is a big one right now. Reed, we're going to talk about the commission lawsuits, the fallout from that. Give us some narrative on what's happening there and how that's going to affect buyers and sellers.
Perfect. All right, so to start this out, I think that we need to give a little bit of background for those of you who are not aware of this National Association of Realtors, or NAR, commission lawsuit. So in 2019, there was a lawsuit filed I believe it was sellers in Missouri, correct? Is that right? And it turned into a class action lawsuit in which they accused National Association of Realtors for price fixing commissions, as well as, I believe, Remax and Keller Williams on that first lawsuit. So with that, the jury of 7 people, they deliberated for a very short amount of time. Just seemed, I think it was hours, actually, not days. And they came back unanimously finding NAR guilty of that price fixing. The sellers of this that had filed suit, they felt kind of burned because they were paying commission to the person that represented the buyers. And, you know, by nature, they thought that that buyer's agent was working in opposition to their interests, right? So needless to say, this was going to bring big changes to our marketplace. And that came this year in the form of a settlement. That settlement included some major changes to the way that we're doing business. And this is important for you guys to know, whether you're a seller or a buyer, and whether you're going to do it now or in the future, this is something that's going to affect you. So as of August 17th this year, we will no longer have a field in the MLS where it is publicly advertised the co-op commission that's offered to the buyer's agent. So what does that mean? That means that we need to communicate even more than we have in the past on the front end, both in like forming an agreement between us and our buyers, but also in figuring out what the seller is willing to offer in terms of a concession. So it will no longer be displayed as a co-op brokerage commission. It will be displayed as a concession. And that concession is going to be in the hands of the buyer. So that's going to be a seller concession to the buyer. The buyer is going to have to decide what they want to do with that seller concession. Here comes the tricky part. The way that this lines out is such that we sometimes will not know exactly what the seller is offering before we go to look at the property. We would like to know that, but we need to have an agreement between us as a buyer's agent and our client as a buyer before we go to look at a home. So, you know, speaking for myself and for these guys here as well, we always have operated in a space where we want to prove the value that we have to offer you as we start our relationship and as we start to go look at some homes and such. That made it so that buyers oftentimes, were fairly comfortable with the services that we provide and the value that we provide to them by the time that we go and look at those homes, or by the time that we've looked at, say, 5 homes. But now we need to essentially come to an agreement with you as a buyer before we go to look at those homes. So it's never been more important to make sure that the value proposition between agent and buyer, or agent and seller, it works on both sides. So there's going to be a number of ways people handle this. Some people will be writing a buyer agency agreement for a kind of 6-month time period, and they'll say, I'm working off a success fee of X%. That would be marked in the contract as seller may pay, buyer will pay, right? And then when we go to look at the property, we're going to go and confirm what the co-op is before we go to look, and let you know, hey, they're offering X seller concession or whatever it might be. Then as a buyer, you can decide whether you still want to look at that property or not. At the end of the day, this is a relationship business, and it's very important that you saddle your horse, or put your saddle on the right horse, or saddle your wagon to the right team, because you want to make sure that you've selected somebody that's going to put you in the driver's seat to accomplish your goals in the timeline that you've allowed for. They're going to provide you good service, good communication, and at the end of the transaction, you will look back and say, wow, that was great. I was well represented. We accomplished my goals. I felt heard, and we're here at the mountaintop walking into our brand new house. So that's kind of like a little bit of the lay of the land in regards to what we should expect with the commissions going forward. Anything else that you guys had to add?
I don't think it's a stretch to say this is the biggest change in probably 50 years in how real estate is transacted in the United States. Mm-hmm. And it's going to take 6 months, 9 months to really figure out the rhythm of how this is going to work for people. I have my own thought about it. To your analogy of meeting people and creating value up front, I wholeheartedly. Oh. Time is up. Boy, you're never going to know what we were going to talk about there. But we're moving on, guys. So we're going to talk now about winners and losers in the commission lawsuit, and that works out great because I was going to talk about that anyways. So, perfect. 5 minutes, winners and losers in the commission lawsuit. What I was saying a moment ago is I've always used the analogy of dating before marriage. When I meet with buyer clients, it's a very soft sell. My job is to create value. My job is to educate people. My job is to help them understand what's happening in the market. Then go look at houses. And I always tell people, I look at houses backwards. I look for reasons not to buy houses. And I try to educate people through that process. And for me personally, I've never really wanted buyers or asked buyers to sign agency agreements until we're ready to write a contract. Different agents have different approaches to that. Under these new rules, that's going to change because we are legally now required to have a buyer agency agreement before we walk through the front door. So my hack on that, or what I think I'm headed for, is a one-day listing agreement where I don't want to put my buyers in a headlock. I want them to feel comfortable with what's happening and still do things the way I've done them in the past, trying to create value, things of that nature. So you will need a signed buyer agency agreement to get through the front door. My view is to keep that agreement very short so that we can not put pressure on people, that we can create value, and then the relationship hopefully just grows organically. In terms of winners and losers, I don't want to be a sour face, but we talk a lot in real estate about win-win negotiations and win-win situations. This feels like a lose-lose to me, guys, because if you look at it, obviously it's going to be a challenge for agents, and I do think you're going to see commission income for many people come down out of this. But the other challenges are buyers are going to have to be responsible for paying their agent. And if an agent asks a buyer to pay 2.5% or 2%, and a seller's offering a 1% concession, that buyer legally is responsible for coming up with the balance of that money. And if you're a first-time buyer or somebody without a lot of resources, that's going to hurt. The other thing I think you're likely to see come out of this is potentially some acceleration of that price damage in the short term, because this isn't good for sellers either. It thins the buyer pool at a time when we don't have enough buyers for the inventory that's coming online in the market. And again, I think we'll figure this out in 6 or 9 months, but the first couple of months of this are going to be a very difficult transition for a lot of people. So I'm not sure what you guys are thinking in terms of how you're going to handle buyer agency and such, but it's a fluid conversation, and I'm sure people are still processing.
Yeah, and I think I would just add to that we're looking at headlines coming down on the internet, on different search engines, where with this new change that's coming, sellers get to keep thousands of dollars, and they're celebrating because they get so much more money in their pocket when they sell their house. But the bottom line is you're reducing a huge market base of first-time home buyers that can't afford to also turn around and pay their agent and put a down payment on the house. You're reducing the amount of people that can see your house. And I think that's going to have a pretty good effect if sellers are unwilling to do anything.
Well, and this lawsuit came about in 2019 when the market was roaring pretty much nationwide, and the whole common phrase was put a sign in the yard and the house will sell. And we haven't seen the market shift until probably, well, last year, a little bit towards the end of the year, but here going to the tail end of 2024, I think it's going to be harder to sell a house too. So I do think there will be sellers willing to pay buyer agent commissions. Like, I don't care, just bring me a buyer. I want to sell the house. At the end of the day, a buyer wants to buy, a seller wants to just move on with their life. And if their house is sitting on the market, I don't think a seller will fret about paying 2.5% to a buyer's agent for bringing more of a buyer pool or to buyer's agents. And I think is a misconception is that buyers are not paying commission. Without a buyer in a bank, in my opinion, there is no deal. There is no commission to be paid. It's not like sellers are cutting a $10,000 check to the listing agent and say, go sell my house. That seller doesn't pay anything until the house is sold. It's a results-based business, and the listing agent has to perform, and a buyer's agent has to perform. And if you're a seller, another side of this is if you're getting a buyer with no representation, there is increased liability there too. Because if that buyer doesn't know the contract and it's up to the listing agent to just disclose properly, and if that buyer discovers anything after the fact and you have a very skimpy seller's property disclosure, you can bet that there might be some litigation after that.
So the number one source of errors and omissions claims is unrepresented buyers working with listing agents and feeling that they didn't get full disclosure or proper disclosure. And I think you are going to see a lot more buyers out there trying to go it alone in this environment, which has massive liability consequences. Read.
All right.
That topic is come and gone. We're going to shift gears now. Talk a little bit about a career in real estate. Travis is the most recently / newly licensed member of the team. Been doing this a little over a year and having some really great results. Trav, want to just ask you, how's a career in real estate aligned with your expectations? How has this played out over the last year? What's been as you thought it would be? What's been different?
Yeah, this is a fun topic, guys. So let me just back up for one moment, and I'm just going to give a little bit of background. So I never wanted to work in real estate. It was not my goal. I got my business degree 21 years ago and bought my first house that had structural issues. It was the P-trap in the upstairs bathroom was not attached. So when you took a shower, it just went all over the floor.
Sounds like you had a terrible agent.
Oh no! So Dale was my
It was
agent.
a HUD home, and it was 133 grand, guys.
137,101.
Sorry.
No, Dale tried to show me some really nice houses, and I was like,
Travis
no,
wanted
this
no
is
part of
way
it.
too nice.
No.
So I kind of fell into this business, and I bought a house, and it was to live in. It was so that I had a place to not rent, that I could start building equity and make a good investment. I didn't even think I'd be in Denver in 2024 still, but here I am. After buying the house and renovating the house and renting the house and seeing kind of how this game works, and then doing it again and again and again, and flipping and selling and reinvesting the money, it made so much sense to me. It was scary to begin with. And so basically, I just got questions all the time. Trav, how did you do this? What's it like being a landlord? And like most things in life, when you see somebody that's successful at something, it's really easy to just make a judgment call that I should do that because look at this person, look at how well they've done. And what they don't see is how much work actually goes into it. And so my perception versus reality of moving into being a licensed realtor to work with my clients, I expected pretty much what we see, but I think the perception that a lot of people have is an agent works for 3 hours, lists the house, it sells in 2 days, and they make a big commission check. And that is not reality. That is not what I expected, but I know a lot of people expect that, or that's their perception. So I think when it comes to a realtor, and I think this kind of goes back into what we're talking about with commission structures and basically creating value, if you hire the right agent that's working hard for you and is making sure that every single thing is disclosed before you get to the closing table and find out 3 months after you buy your house, then you actually are going to save a lot of money with this. And I could give you a number of examples, but one that I'm thinking of right now is a purchase that one of my clients made last year, a pretty significant home purchase. And we went and we got an inspector in, and we really went hard at looking at the joist underneath the deck. And we're talking about a $75,000 deck. And that became a huge negotiation piece as they moved towards the closing table. And ultimately, if you look at the breakdown, he actually saved money by us really getting intentful at looking at all of these little things. So it's about what I expected, but that's because my perception and the way that I work is to really make sure that we check every box and we don't leave any stone unturned.
Has there been anything that you have not expected that you've come across?
I think as you get your business built, I think your clientele has to see proven results. I don't think when it comes to the largest investment of somebody's life, which for most people that's real estate, that they're going to trust somebody that got their license two weeks ago. You know, it's something where you have to build up and experience things. One thing that somebody told me, oh gosh, this was 2 months after I got my license. He said, well, all realtors are the same. And I said, no, they're not. Trust me, they are not. I've worked on a number of sales.
That's somebody who's hired crappy realtors,
yes,
right?
Right.
Yes.
That's right.
That's the
It
conversation.
only takes one hire to get that perception, and that is something that goes on in our marketplace. And maybe, for somebody like you already knew that you had seen behind the scenes because you're an investor and you've worked with Dale. But for a lot of people, they've only seen one thing, or they've only had one experience, and that's something that we, try to educate them on the way that a realtor can assist them and the value we can bring.
One of the biggest traps in real estate is when an agent wants the deal worse than the client does. And I've seen that in this market over the last year. A lot of these agents are really motivated to try to make these sales happen, and their buyers have questions, their buyers are fearful. My joke this year is there should be a buyer's remorse deadline in the contract, because it's going to come in every one of these deals at some point. All right, moving on to topic number 5. We talked a little while ago about potentially some price volatility during the second half of this year with the commission lawsuit, shifts in the market. Reed, is it possible to time the market?
All right. So I really love this question because whenever somebody's buying something that's, fairly expensive or valuable, they're always looking at the marketplace and seeing like, where can I get my best entry point into this marketplace? So I appreciate and respect the idea. However, my answer is that usually it's not really logistically available for everybody to time the market perfectly, because the majority of people are actually going out to purchase for a home that's going to provide utility to them, right? And they need to make this move in a time that makes sense for their family. We have things like work schedules and school year schedules, right? And a ton of other commitments that make a big difference in the time that you want to relocate, whether you're selling your home and buying a new one, or whether you don't need to sell and just need to buy. All of those factors come into play. So I would say that when you're looking at timing the market, of course, you would like to look up ahead and consult with an excellent agent in that local marketplace that can tell you like, hey, seasonality wise, we do best selling between this time and this time. Those are things that are achievable as long as you plan in advance. However, just trying to be able to like predict the market with a magic 8-ball. If anybody was really good at doing that, then, they certainly wouldn't be sitting here talking to you about, being able to, time the market and, do the transaction, but also it's just not a reality. So I would say that the most important thing to remember is that there's a lot of factors that go involved in your purchase or your sale of your house, and a lot of those are personal to you. I mentioned previously that we typically have a great selling season and a not so great selling season. That's something you can time. So for example, usually I like to bring on listings usually no earlier than kind of like the April timeframe. And I usually like to get most of my listings sold before July 4th, ideally, if we can. So that's like our really, really sweet spot. Do you want to bring a listing on 2 weeks before Christmas? Probably not. One, because you don't want to have people in your house, and two, because they're probably not going to come through your house, right? So I would say that timing the market is something that you can do on certain aspects when you're looking at your primary residence. Where you can do it a little bit more is when you're looking to invest, right? When you're looking at through the lens of an investment, you can look at this through the lens of a business, and you can really drill down into the metrics and the statistics of a marketplace to identify trends and work with a local agent to pick your entry point to the marketplace. So that's kind of what I think about timing the market.
Yeah, this is an interesting topic, and I do a lot of not just real estate investing, but stock investing and tax liens and different types of investments. And it's an expensive lesson for somebody to learn that they can time the market perfectly. Mm-hmm. And there's a wide array of statistics about this where people think they can time the market. It's not timing the market, it's time in the market. Mm-hmm. That's what really matters. And this year's a perfect example. Okay, August 17th, we got this commission structure changing, right? And we've got these different things going with real estate. We've got high interest rate, higher than people have seen in a long time, that are still hovering over there. We've got high inflation. We got a number of factors, and we've got inventory going up. So naturally, we would see probably prices come down or soften a little bit towards the end of the year. Well, what happens in 3 weeks if the Fed says, hey, we're going to cut interest rates by 0.5%? We don't know. We have no way of seeing the future, so trying to time it perfectly is a fool's errand, really.
So as the most seasoned real estate broker on this panel, I remember 9/11 and the impact that had on the housing market. I remember the Great Recession and the impact that had on the housing market. To me, I felt like for much of the last decade, there's been a lot of unhealthy thinking and thought process in the Denver real estate market, because every single bet has paid off. You could make terrible decisions in 2013, 14, and 15 and think that you were a genius because in 2019 your home had gone up 30 or 40% in value. Warren Buffett's famous saying is, it's only when the tide goes out that you can tell who's been swimming naked. I feel like there are a lot of people who have simplified real estate in their own mind and think that it only goes in one direction all the time forever. And reality is, homes have utility, and you need a place to live. And the way to look at these things is not over months, but years. What is this market going to look like in 3 years or 5 years? What do demographics tell us? Is our population shrinking or growing? Those are the kinds of decision or the factors that should be going into your decision process, as opposed to what's going to happen the next 3 months or the next 6 months, in my opinion. Yeah. So it'll be interesting to see if people become a little more grounded. Okay, so real life just happened. Travis Carey is now talking to a vendor who's going to a property for an inspection, and he had to get up and run away because that's what happens in real estate. And he'll come back, and then one of us will get a phone call, and we'll probably get up and run away. But that's the nature of this business, right? So we're going to continue on with our next topic.
Yep.
Robin, you are up. What's the most important thing to look for if you're buying a home in Colorado? You have a lot of clients who've come here from other places. Yeah. Your channel attracts people from other parts of the country. What are some things unique to Colorado that buyers should be aware of?
Yeah, that's a good question. First of all, I mean, Colorado is different than a lot of states in several ways. Let's talk just climate. Let's talk physically. It is a lot drier here. So one thing is we have different cooling systems, for example. So just looking at the actual home, I get folks who come here and they're like, what the heck is a swamp cooler? Just as an example.
Sounds terrible.
Yeah, what is a swamp cooler? Why would you use a swamp cooler to cool your home? Because, well, it only exists in dry climates, and I don't want to go in a rabbit hole, but it's using water and a fan to blow cool air into your home. It does save you money on electricity compared to air conditioning units, but that's just one example. There are other things like you want to think about orientation of your property. In the wintertime, we tend to get sun more at the south. And so if you have a north-facing driveway here in Colorado, you're going to be dealing with ice in your driveway pretty much all throughout the winter, unless you can keep up with shoveling that driveway. If you have a north-facing driveway, because you won't be getting the sun hitting that side. That's one thing. But zooming more into like the Denver metro area, I think when I get buyers who move here from out of state, a lot of the times it's about what your lifestyle is. So are you a family? Are you a bachelor or bachelorette who's just, looking to kind of get into a professional career? How far do you want to be from your work? Typically, most of the buyers I get, they want to be within 15 to 20 minutes from downtown. So you're looking at a lot of the outer suburbs. And a lot of the buyers I work with here in the Denver metro area say, I want to be closer to the foothills or closer to the mountains. And for that reason, for financial considerations, you're going to have better resale value with your home the further west you go in the metro area. So areas like Arvada, Lakewood, Littleton tend to have the best resale value because you're closer to the foothills. And that's what most people come here for, is to be close to that lifestyle. Now, it depends on where your job is too. And what kind of commute you want. Everything is shook up in the last several years, people working from home, but now everyone's going back to work. So one of the things we saw during COVID, people all wanted to go buy a mountain house, and they realized it's really difficult buying a mountain property or living on a mountain property. I have to plow my own driveway when it snows. That's really hard. And what we saw was in 2023, last year, the mountain markets, the foothill markets around Evergreen, Conifer, were starting to soften a little bit as folks were starting to make their way back into the city. Reality was setting in, and it's not easy to live in the mountains, even though you see all these nice images on Instagram and Outdoor Magazine. And it's like, yes, I can have an A-frame in the mountains. It will be great. I can have a tiny home in the mountains. There are a lot more considerations that you actually need to take with that. And financially, also just thinking here, not only the resale value being better on the west side of the metro area, but our contract here, I'm not really sure how purchase contracts are in other states, but here we have a lot of buyer protection and buyer contingencies for our purchase contract. And so that is something that you can keep in mind. And also our property taxes tend to be lower relative to other states.
They were.
Now, because why he's saying that is because we had what's called the Taxpayer Bill of Rights that passed in the 1980s, which essentially meant that any leftover revenue that the state government had above their budget would get returned to the taxpayers. That was the Taxpayer Bill of Rights. Part of that has been repealed in the last year, and so we're starting to see property taxes are going to start going up here pretty soon, along with insurance as well, because of all of the hailstorms that we get here in Colorado. So it's something you're going to have to take into consideration moving here to Colorado. We do get a lot of hailstorms. We get fires in the foothills. So our insurance premiums have gone up significantly, 40% in the last 2 years.
Every part of the country has its own kind of idiosyncrasies when it comes to real estate. I was a broker in California, and everything there was about seismic safety and having to strap water heaters, for example. In Florida, you have terrible mold issues and flooding issues. So it's understanding local markets and realizing they're not all the same, and that things that might be important in California may not be important in Colorado, and vice versa. The other thing with mountain living, and there was an incredible surge in 2020 and 2021 of people going up there. The mountain homes are beautiful if you never have to leave them.
That's right.
Next topic. This is kind of a general discussion question for all of us. Question is, what advice do we have for sellers selling in a shrunken market? And by a shrunken market, I mean a smaller pool of buyers going forward. My general narrative on this, I always tell my seller clients, you have one shot at a first impression, and you better get it right. During the hot market, 2020, 2021, the first half of 2022, you could get away with anything, and one of my cliches during that era is it was a great time to sell bad real estate because there was a buyer for everything. There is no longer a buyer for everything, and you have to stand out, which means you need to be super sharp on pricing. Condition has to be as good as you can get it. Location is something you can't control, but it absolutely matters. But I think this is a season where we have to have really serious conversations with our sellers. And the consequences of missing the market are extreme. I think we all have stories and analogies of things we've seen this year where sellers have tried to get over the tips of their skis a little bit on pricing, and the market won't have it. People are looking for value. They're comparing homes one to another, and it's a beauty contest and a price war. So I don't know what you're saying to your sellers, but to me, it's a very serious time, and it takes a very serious approach to getting a home sold.
Yeah, it's never been more important to put in the prep and the strategy time up front, right? Like that's something that we've all done for years and years and years, but as Dale and Robin have referred to, 2020, 2021, 2022, slap your price tag on the wall. Somebody's going to come and buy it up because rates were so affordable comparatively, right? I think the other key thing is like really know your strengths with your listing and with your sale, right? Anything that makes your home unique compared to your competition is something that you shouldn't ignore. You should look at that. You should polish that up. You should turn that into a real sales feature of this home, right? There's a lot of different things that could fall into that, category. Maybe, the home that you bought is the same model as a lot of the other on the street, but the previous owner had put in a beautiful bay window seat, in the dining room or something like that, right? Those are little things that you can capture people's attention with and show that you're not the same as everybody else. And I think in a shrunken marketplace, being unique in addition to being prepped and priced the right way is the method to get the interest and the looks and the buyers that you look for.
So let me offer something else in that regard. I think it's incredibly important for listing agents right now to be out physically looking at the competition, looking at other homes that are going on the market in neighborhoods where you have listings coming online, because the pictures lie and you can't smell pictures. But there are different qualities of properties on the market, and in the hot market, you could throw anything up and the market would figure out what's the maximum somebody would pay for it, and it would just happen organically. Right now, you have to educate your sellers. And if you have firsthand knowledge of the home around the corner that went on the market last month or one that is coming on the market in 2 weeks, that's really important information that you have to have right now. And the short version of this conversation is you can't suck at this anymore. This market allowed a lot of very sucky people to get away with bad habits for a long time. This is a market that's going to force you to develop or refine your best habits, or you're not going to survive it, because it is a lot harder than it was in the past to sell a home.
And I think you got to look at data too, and you have to hire a realtor that's going to be honest with you. At the end of the day, you have to hire someone who's going to give you the honest truth and is going to tell you, hey, it smells like cat pee in here, or that this needs to look better. We need to clear these to make this room look bigger. Whatever it is, you need to have a realtor who's going to be honest with you, that's looking out for your best interests at the end of the day, even if it's a hard truth up front. But also, if you're selling a house in September and your neighbor down the street got 40,000 more in March, they're different markets. Seasonality matters too. No matter what rates are doing, we've seen that basically January to April, buyers are out. It's a new year, new house psychology. And in September, the market just shrinks regardless. So you have to know the data, and you have to have an agent that's going to present you with numbers that will set you up for a good pricing strategy.
I don't want to sound like a mean person, but I've turned down listings this year because if a property is not saleable and the seller's expectations aren't aligned with reality, you're setting yourself up for a major time investment and a lot of drama that you may not need as an agent. And those conversations are hard because the answer to everything in the old market was yes, every time, all the time, because it didn't matter. This is the everything matters market, and that starts with your selection of an agent. You've got to make sure you hire somebody that knows what they're doing and is willing to work.
Yep.
Time's up.
I'm going to change gears here a little bit and talk about home construction. Denver is an interesting market because we have homes that literally date to the 1800s. Construction booms in the 1940s after World War II, 1950s, 1960s. Travis, how has home construction evolved over time? What are the differences, and maybe what are some of your favorite types of homes? What eras do you think offer the most value?
Yeah, I love this topic. So Denver has a wide variety of a little bit of everything. And when we look at just American history and what this geographic area meant as people were coming across the country, what kind of houses they built, in a lot of pockets in Denver, you see houses 100 years old. They're these tiny little houses, and if you look at them closely, you can see where every 30 or 40 years a new addition was put on them. And there are some really unique houses, and then we have this whole new boom in the last couple decades where we see places like Solterra. We see different communities up in Willow Springs where we've got these brand new massive houses with tiny little yards and strict HOA communities. And so to answer your question about some of my favorite homes, I think a lot of people in Denver have dogs, right? We're a very pet-friendly
Dog capital of America.
We're a pet-friendly city, and we also have a lot of people that like to get outside. They like to be around green belts. They like to have a yard. They want to entertain. We have some of the most sunlight per year of any state, and so being cooped up inside is just not my cup of tea. I want to be outside. I spend more time in my backyard than I do in my house. So some of my favorite communities tend to be around the 60s and 70s with a really well-maintained house because you typically don't see any HOAs there. So you don't have as many restrictions of the things you can or can't do. You have bigger yards. The one drawback is houses that were built more in the 50s, 60s time frame, family dynamics were different. You had fewer moms working. They were more stay-at-home. You have houses back then that were split up into smaller sections and smaller rooms. Now it's the complete opposite. When people come home, they want an open floor plan, an open concept. Back then, they wanted to shut the door and be away from everything. And so for me, and for a lot of my clients that are buying their first or second home, and they want that kind of lifestyle, looking at a 60s and 70s home that has been properly maintained, taken care of, and renovated to feel more open is kind of my favorite place and what I find is most attractive to most of my clients. Plus, you had bigger yards. Now you go I use Solterra a lot. I live really close to Solterra in Lakewood. And a good example of this is you can't have more than a 4-foot fence. I believe this is what their HOA is. You can't have more than a 4-foot fence, and it can't be a closed fence. It has to be open. And so if you want any privacy or anything. Now, for me, I don't particularly like that, and you're very close to your neighbors. But if you're retired and you want a beautiful place and you don't need a big yard and you don't want a lot of exterior maintenance, it works great.
Seems like there's kind of like something for everybody here, right?
That's a good way to put it.
I think that like you had mentioned, Trav, we have plenty of turn of the century homes that were built early 1900s Those are usually around our most oldest established parts of town, near downtown Denver, in near like Old Town Arvada, a lot of those kinds of places. And then of course we got a lot of building surge in the 60s, the 50s and 60s, and those are a lot of your like kind of mid-century modern homes, ranches, brick, that kind of thing. Those are the homes that you always got to watch out to see if they put a sunroom on the back, just over the patio, right? You see a lot of those because they didn't have those sunrooms originally, or those decks. And then you get into like the two-story tri-level, bi-level of the 70s and 80s. There's those kind of homes. And then you get into the 90s where we're building ranches and 2 stories again, but still with pretty big yards, even into the early 2000s. And then once we got to like, say, 2007, 2008, 2010, we started to build as many homes on as small of lots as possible, like you had referred to. Yes. And that's great for people that want low maintenance, and they want low maintenance on the house, but the yard as well. So I think that there's something for everybody. And then we didn't even talk about getting up into the foothills and homes with acreage, or like small ranchettes, 5 acres on the outskirts of town. So there's truly something for everybody here in Denver.
There are also generational issues with homes. Aluminum wiring, obviously a very big issue from the late 60s to the early 70s. Galvanized plumbing, which almost nobody wants in their house, and many homes built before 1960-ish. So there are things you have to know and be educated through when you're looking at homes. One thing I've seen a little bit, and I want to be careful about stepping on toes, but during the pandemic, the new home construction process was bad because of supply chain issues. I had a new build out in Thornton, which I'll tell you about another time. All right. Robin, so we want to talk about what happens if a seller does end up with multiple offers on their home. Price obviously is a big consideration, but what makes one offer better than another? What makes an offer more attractive than another that might be on the table?
Yeah, this is a good question, because I think everybody thinks that price is the primary thing that you want to look at on an offer, and that's not the case. Getting under contract or getting offers is half the battle when you're a seller. Getting it to the closing table is the other half of the battle, and usually the tougher part of the battle. Yes, all marketing, getting all that taken care of matters, but now that you say you have 5 offers, typically what we do is we have an offer analyzer. I like to put it in a spreadsheet, and you break it down by not only price, but you break it down by experience of the agent. So who are you going to be working with on the other side? That is huge. If you're working with a newer agent, they don't really know the contract. They may be coming to you.
Some of them may. Let's be fair to them.
Fair. Yes, we've all been new agents, right? And
there are personality types that solve problems.
Correct.
And personality types that create problems.
I shouldn't base it on what their
Sometimes
transaction
really
volume is.
experienced agents that create problems.
Exactly. But you want to know who you're going to be working with, not only who the agent is, but if they're financing, which in the most case, buyers are financing these purchases and they're not cash. And on that note, cash isn't always king. And I'll go into that in a second. But if it's financing, you want to know who the lender is. Do they communicate well? Are they local? Or is it a big bank that you don't know who you're going to be talking to if you come up with a snafu in the contract? There are dates and deadlines in the contract that you want to understand that your seller is protected, because once you go under contract as a seller, your leverage goes away quite a bit because the buyer has all the protection and all the contingencies. So you want to get as much leverage as possible as a home seller before going under contract. You want to try to get all the price and terms in your favor, because once you're under contract, it's pretty much all the buyer's leverage at that point, unless you can get backup offers. So you're not only looking at price, how much are they bringing down? And if they're cash, what we've seen, I know Reed's had this experience with cash investors. They think just because they're a cash buyer that they can pretty much beat you over the head with any inspection ask, because, hey, we're cash. We're bringing cash. We don't have a loan contingency. We don't have an appraisal contingency in the contract. So because of that, we can do what we want and we can use that power. So that doesn't always mean just for you as a seller, for the convenience of getting your house sold, cash isn't always king. Sometimes it's okay to work with a financing offer if you have a good team on the other side, a good buyer's agent, a good lender, if they're putting a good amount of money down. Another thing you want to know, some intangibles. How long has this buyer been looking for? Did they just start? If they just started and they got under contract, the buyer's remorse deadline that Dale was referring to, the odds of that happening goes up significantly. So I like to know, how committed are these buyers? If they've lost out on a couple deals, they're motivated, most likely. You want to gauge that level of motivation and commitment. I always like to have my sellers personally sleep on an offer and have the buyer on the other side sleep on it. So if they're sending us an offer and they want a decision that night, I try to push that deadline to the next day because I want the buyer to sleep on it too. I want to check back in with them the next day. Hey, are they still on board? Are we good to go here? Before we're actually moving forward with a contract. But there are a lot of dates and deadlines and terms in the contract that matter just as much as price. The top price offer isn't always the best offer because it's really about what's going to get you to the closing table.
So a couple of things real quick on that. I want to talk about lenders, or allow the panel to talk about lenders, but I don't want to give away secrets here, but very often with my listings, I'll find something to counter in the contract, just to send that contract back to the buyer to make sure they still want to sign it 6 hours later or 18 hours later, or whatever the case may be. Because buyer's remorse is brutal on sellers. You have one shot to get it right. And when you accept that contract and the property comes back on the market 5 days later or 8 days later, everybody assumes something is wrong with the house, and it might have been something was wrong with the buyer, right? So I'm looking for those second and third validations from a buyer to make sure they really want to go forward before we make it official. On the subject of lenders, I know my opinions on that. I know the panel has opinions on lenders. Why do lenders matter?
So the lender is probably, the second most important person in this whole deal, in this whole transaction. And not all lenders are made equal, right? So when I have multiple offers on my listing, I'm oftentimes vetting that lender very heavily on the front end. I usually am asking them as many questions as they will answer, right? So typically questions like, how long have you been originating loans is a good one, right? How long have you been working with this particular company is one that I like to ask as well, because every company has its own, processes and workflow. And if somebody has been in a company for a long time and originated a lot of loans, they typically know how to get things done within that company structure. Another thing that we're asking is related more to the qualification of that buyer. Like, are they close on their debt to income ratio, right? Like, we don't want some situation in which that lender, we go under contract, lender has not locked their rate yet, rate goes up, pushes them out of qualification on their debt to income ratio, right? Also, like, how does this lender work? Do they have a team in which, like, okay, their processor does this, their loan assistant does this, and they basically don't do anything? That's not what you want. You want somebody that's going to take ownership of that file and make sure that it's going to go to closing, and you're going to get that clear to closing before your deadline in the contract. So lender is ultimately important, and you want to make sure that on the sell side that your agent is vetting that lender really well and reporting back to you before you make a decision. And on the buy side, you want to make sure that you pick the right lender to start your journey with.
Perhaps some comments on national lenders versus local lenders and consequences of that. I want to be respectful to big banks who I will not name because I bank with one of them, but I say they're too big to care. And part of the issue with a lot of the big banks is that you have 50 different contracts from 50 different states that have a different method and methodology for selling homes. We have a ton of dates and deadlines in our contract. And if a big bank looks at the closing date and says, we'll get this thing closed by X date, and they miss deadlines inside the contract, that puts a buyer's earnest money at risk. So local, in my worldview, is preferred whenever you can do it. We were talking a little while ago about some things unique to Colorado real estate. I think there's some additional things that we should go back and touch on. Reed, what are some other things that folks want to be aware of if they're coming to Colorado from another part of the country?
Yeah, absolutely. So, real estate is hyper-local, and it's very hyper-local in regards to like the different considerations that we have to make due to the place that we live and the way the soil is and all that kind of stuff. So first one is that we have really expansive soils, especially on the west side of Denver metro area. Essentially, these soils usually have a large amount of bentonite in them, and bentonite by its nature expands and swells with the addition and the subtraction of water, right? So if you got a bunch of bentonite clay that's expanding, it oftentimes will push your sidewalks up. So sometimes you'll walk through neighborhoods in the west side of Denver and you'll see the sidewalks are going up and down like this, right? Well, that's a lot of times because of that expansive soil. So with that, there's certain parts of town that are have bigger problems with that, right? You know, like you think of anything down, you know, in the like kind of Kipling and 285 kind of area. So you want to talk with an agent that knows the different areas and knows what different things to watch out for in those areas, because you could easily, if you're moving from another place, go and buy a place where there's really expansive soils and a lot of foundational issues and not necessarily know it if you don't have the right representation behind you. Another thing that comes to mind is radon, right? So we recommend that all our clients test for radon upon inspection. Radon is essentially a odorless and clear gas that is from the decomposing uranium in the soil. So there's radon all around us right now, right? But in concentrated quantities in a house, it has been known to cause cancer, things like that, health issues. So EPA recommends that radon can't be more than 4.0 picocuries per liter. So we test for that. We make sure that, you know, that if it is high, that we account for that on our negotiation. But radon is another thing that we test for and is a common element that we deal with here in our local marketplace.
It's interesting. I actually own property in Texas, and one of the things my home inspector taught me very early on in Colorado is that in Colorado, water is the enemy of houses. And drainage matters, and keeping water away from your foundation matters, because we have over 100 freeze-thaw cycles every year where it's 15 degrees at night and 55 during the day, and the ground swells and it contracts and it swells and it contracts, and that can do terrible damage to your foundation. In Texas, where it's 195 degrees all summer, you actually water around your foundation because the ground gets so dry your house will sink. So it's the exact opposite, and the things that you do there will lead to peril and catastrophe here. And so it's just important to be aware that there are idiosyncrasies and characteristics unique to different parts of the country.
Absolutely.
Yeah, I think probably 20% of home buyers that I've worked with, we've had to get a structural engineer to the house just because of that expansive soil, the bentonite putting the pressure. It's very common where you're going and looking at houses here, and if you can see the foundation from the inside, you're likely to see maybe a crack, and it could be hairline. It might not be an issue. That's why you want to get the engineer. We're not licensed engineers, but we've talked to enough engineers. We can kind of point out, you know, that might be something you want to get an engineer to look at. You know, the horizontal cracks more than 1/8 of an inch, that's probably an issue that hasn't been addressed, that, you know, you're going to need to have addressed either with piers or with epoxy injections. Those are very common here with the homes in Colorado.
Yeah, and I would just add to that, because I actually have an engineer looking at a structural issue today, so this has been on my radar. But I would actually add to that, you got to look for the signs too, right? So it's a very common thing here, and if somebody's trying to cover something up, how can you recognize that? I always say, if we're going to go look in specific neighborhoods known for bentonite issues, where we see one house is priced $40,000 less than the house that's exactly the same that just sold, there's probably bentonite issues. So we're going to go into that neighborhood and we're going to look at it, and it was a flipped home or a home that was just recently drywalled, or we're seeing some patchwork around the outside. That's something we really want to look closer at. That might look good when you first see it, but upon further inspection, you find some pretty big issues.
One of the really important things about working with a competent realtor, unlike what you find on Zillow, we can go back and we can access MLS printouts from 5 years ago, 10 years ago, 12 years ago. And if a property was flipped, we can see what that looked like when the flippers bought it in 2011 and what they did when they sold it in 2012. And a lot of times you can piece the history together by going back through that old data. I always tell my clients that when you buy a house, you buy its history. And so it's really important. And I would much rather have a home that had a single owner for 40 years than a home that sold 7 times in 12 years for that and other reasons. Shifting gears a little bit, we're going to talk about homeowners associations. We're going to talk about condominiums, communities that are prone to have homeowners associations. And just a little bit of narrative around this. This to me is a very important topic right now. The condo market, I think, is likely more vulnerable than the traditional single-family detached market right now because of the price pressures that we may be seeing over the rest of the year, because of the higher property tax assessments, because insurance costs are going up. these communities that have a lot of first-time buyers with smaller down payments, which is generally the condo market, there's more vulnerability there. And one of the things that you have to do as an agent is really do your diligence with those HOA financials and those HOA documents and know what's going on inside of a community. You've got to be able to read through those and look for any hint of a special assessment, any hint of financial distress, any hint of litigation. Because any liability that you assume when you buy a property in an HOA community, it becomes a liability when you sell, or if it turns into a special assessment, it's going to be your problem to deal with. So there are always exceptions. I don't want to fall into the trap of being over generalizing here. But I do worry a bit more about smaller HOAs. When you've got HOAs with 10, 12, 14 units, 1 or 2 delinquent owners or a lawsuit can sink your HOA. So very often there's strength in numbers when you're looking at HOA type properties. But your experiences, condos, HOAs, what things should buyers be aware of if they're just starting out that they may not be thinking of while they're looking at the cabinets and the pretty counters?
Yeah, I'll go real quick and then you guys chime in.
We all have plenty for this.
Yes, yeah. Section 16.2 of the contract, which has to do with special assessments. Was a special assessment approved before the closing? Sometimes you can go and look at a condo, it looks pretty, the numbers, you don't see anything about a special assessment, but the 16.2 checkbox in the contract needs to be checked, because if it's not and a special assessment is approved before you close on the condo, it can end up being thousands of dollars that you're unaware of until after you own the condo.
And with that note, you can also get special assessment insurance, HO6 policy for your homeowner's insurance policy. Obviously, the premium will go up. For example, there's a condominium downtown, and I heard about this at a closing yesterday, that each unit was given, because they had to redo all the piping in this whole building, and I'm not going to mention the building, but it was each unit had to pay a $70,000 special assessment. And so we're not talking small money. That's a lot of money to be hit with the bill for $70,000. So you want to make sure you are getting HO6 and make sure you have adequate coverage for what could come up in that building.
And chances are, if you're going back through those meeting minutes from the past 6, 9, 12 months, you're going to see some mention of that. Very rarely do things just magically show up. They're discussed. I was actually president of an HOA for many years, a condominium complex with 33 units. I bought my unit back in 2006, which means we walked right into the Great Recession. And in our experience, we frankly just punted on a lot of maintenance to get through the recession. People were struggling. There were units going into foreclosure. We were trying to keep people from losing property. And so there were a number of maintenance issues we just deferred, which eventually resulted in some pretty hefty special assessments on the backside of the Great Recession. But the point is, you can't just look at that stack of documents and call it good. You need to go through them yourself because it's your responsibility as the buyer, but a good agent should be looking at that with you and helping you look for those key terms like special assessment, like litigation, anything that would suggest there are larger issues on the horizon.
Yeah, those documents are going to tell a story, right? And
what if you can't get the documents?
Well,
that tells a story too.
That does. Essentially, you're, on the HOA review, you're screening this HOA from the moment that you go and look at that house to start, or even before you look at that house, all the way through your HOA or association documents review deadline. And it tells a story, right? So if there aren't documents, that's a problem. If there aren't meeting minutes for the last year, that could be a problem, right? Obviously the financials, those could be problems too. But then looking at the condition with your eyes is a big deal too. Do you see a 1985 built condo complex with a bunch of cedar siding on it that's super worn? Like, those are things to look out for, because those are things that it's very unlikely that they're really adequately prepared for that financially.
Sure.
And what are the reserves in that HOA? Some HOAs will do reserve studies where they bring in a third party and they actually study how much this HOA has in reserves. The less in reserves, the more likely for a special assessment.
Sorry, Robin, your time is up. All right, guys, we're in the home stretch here. So just a couple of more topics. Travis, as we mentioned earlier, has owned multiple properties that he has renovated, that he has rented out. He's got some amazing stories. Travis, what makes for a good rental property? What lessons have you learned along the way, good and bad?
Yeah, amazing stories. So I don't know if that could go either direction. I do
5
have,
minutes.
I do have amazing stories. Yeah, well, I will say that again, kind of to echo what I was saying earlier, when somebody sees from the outside, you bought this property, it appreciated in value, you've got monthly cash flow, it looks sexy and nice, and that's what they want for their own life. What they don't see is that sometimes they went skiing on the weekend and you fixed a toilet. Or I'll tell you, when the Golden State Warriors won the NBA championship, it was about 9 o'clock at night and my basement flooded at my rental property. So I say all of that because if anybody's thinking about getting into investment properties, you have to also be prepared that this is not just glorious all the time and that there's definitely sacrifice that goes into it. And from a financial standpoint, it takes time to get your feet underneath you. You don't buy a house with a 20% down payment and then have an $800 or $1,000 cash flow per month. The numbers just don't work. It's a process through it. But no, as far as like my rental properties, and this has been a lesson that I've learned over a long period of time, when you're new at doing this, you want to make it look awesome. And you're willing to spend the extra money to get a little bit of a nicer floor, or do a two-toned wall, or do the extra pieces. And really, when it comes to investment properties, your goal is to make it a low-maintenance property that looks good, that you don't have to have a constant touch on over and over and over again. And I would say one of the other big factors that took me 7 or 8 years to really grasp the concept and become good at is screening, is putting the right people in your houses. The last thing you want to do is overpay for different renovations or repairs and then put somebody in the property that's not going to adequately take care of it. So those are some of my very brief bullet points when it comes to this.
Do you have an amount that you recommend having in reserves per property, like a percentage of, what rent you collect or how many months collected? I see a lot of different strategies on that.
Yeah. My strategy is I want to have at least the ability to replace each furnace at each house. So $5,000 per house. That doesn't sound like much, but I want to back up a little bit from a financial standpoint here on this. You want the cash readily available. That's where people get themselves into trouble. If you're having to borrow money to make repairs. So I have a reserve, but then I also have funding that's easily available, that's safe. I don't have a specific number, but I always think about it as at any given point, $5,000 could be the repair cost. That's a furnace, that's an air conditioner. A hot water heater's not that expensive, but those are some costs for just routine maintenance. But then you also have to plan on at least one vacancy per year. So if you figure into your numbers, 11 out of 12 months are going to be rented. That's a safer number to look at.
Yeah, I've owned rental property over the last 20 years, and my narrative on this has shifted. And again, different people will have different narratives. Obviously, there have been a number of laws passed in Colorado in the last 2 years that have some pretty serious consequences and potential consequences for landlords. But the other difference is in the market right now, because I have many clients, including Travis when he was a client instead of a colleague, who bought homes in 2010, 2012, 2013, and when they wanted to move up in 2015 or 2016, the narrative was figure out how to hold on to that property for at least 2 more years, because when you had $30,000 or $40,000 a year of appreciation, it was worth it. I'll unclog all the toilets I need to clog. If you're in an environment where appreciation is flat or going backwards, that narrative changes. In the old world, I used to say, hey, if you could run cash flow neutral, it's a good rental. In this environment, and again, it will depend on the price point of the property, but in my view, if you're not cash flowing at least $500 a month, that's not a good rental right now, because your costs are going to be significant. Replacing a furnace is more expensive than it used to be. AC units, a roof, the cost of all of these things has gone up very dramatically. So the standard for what makes a good rental has changed as well. And I know both of you have had and have rentals as well. Other wisdom?
I think that, like you said, you need to take into account the time that we're living in right now. There was years where the model was you put 20% down on a house, and if you can cash flow, like you said, Trav, $500, $800 a month, then you felt really, really good about that investment. And now things are just a lot different. It's just a lot different out there. We don't live in a marketplace where you can do that anymore here in Denver.
The market won't bail you out. And so your decisions on the front end matter, which is why it's really important to hire a great agent. We are just about to the end of this Roots Roundtable. We have one wrap-up question for the panel here. We'll start with Reed. Reed, if you had a magic wand and could change one thing about the way real estate works, or impart some wisdom to buyers and sellers, what would it be?
Well, I forgot my magic wand, so I'm going to.
You're not timed on this.
We're not timed.
I'm going to impart some wisdom, hopefully. I think that at the end of the day, we work in a relationship-based business, and that relationship is an exchange of mutual value back and forth. There are, give or take, say 10 to 15 parties and persons that need to be involved in a real estate transaction to get it to the finish line. It's so important who you choose to work with. And that goes to everybody. That goes to the agent that you choose to hire. That goes to the lender that you choose to hire, to your home inspector, who hopefully you get a good referral from your agent on, all the way to all the different vendors that you need to get information from during the process, right? Say that your inspection and the roof is questionable in condition, right? You need to make sure that you have a good roofer that you trust to go up there and give you an accurate opinion on that roof, right? My advice to you is to be very diligent about the way that you interview to hire people to help you accomplish your goal.
Well, if I had a magic wand, I would get rid of all the TV shows that make real estate look so vain.
I love that answer.
And I think they've ruined the perception of what real estate is, buying and selling a home, and who real estate agents are, the $1 million listing agent. And that's no disrespect to any.
Can I comment really? I apologize, but I feel like that's one of the reasons the commission lawsuit ended up being a unanimous 8-0 in 2 hours.
Exactly.
Because people's perceptions of
It's
real
the
estate
perception.
are twisted.
Yeah.
HGTV, baby.
Yep. I would get rid of those TV shows and make a TV show of what it's actually like for realtors looking at a sewer scope, a video going through a sewer line. That's our job. It's the nitty gritty, and you don't see that until you get your license. I would also raise the bar for getting into the real estate industry. I would make it a lot more difficult for folks to get in and change the perception in any way possible that it's not as easy as it looks. So.
Yeah, I'm gonna kind of tag on both of you guys with that. Colorado, you don't need an attorney to close. I'm from New York. You have to have an attorney when you buy real estate. There's this is a significant transition and transaction that when people are buying a home. And when I was younger, years ago, you price shop. And I think, if I had a magic wand, it's to instill just time to think about this. When you do your taxes, you hire a tax professional. If you have a cavity, you go to a dentist. If we hire professionals, and the more you surround yourself with people that are good at what they do and value their work and value doing things with excellence, the better of a place you'll find yourself in life. And the more that you surround yourself with whatever the cheapest option is and whatever you can do for the least amount of money with the least amount of experience and take the easy road, the more of a difficult situation you're going to find yourself. And that goes far beyond real estate. But I think especially in real estate, when this is the biggest investment of your life, it's worth finding the right value in an agent. So.
Yeah.
To just piggyback on what Travis said, if I had a magic wand, I'd go back to October of last year and I would make the commission lawsuit go away. And I can't change that. I don't want to sound like sour grapes. It is what it is. We're all going to have to deal with it. But one of my great concerns here is my view of how a buyer functions in this environment has changed. Because in the old world, a buyer's job was to figure out who the most competent person is you can hire to assist you with buying a home, and that was the conversation. Starting August 17th, for some buyers, the conversation is going to be who will do it for cheap. And as we're talking about here, that decision can lead to all kinds of catastrophe in the short run and the long run. And we can't fix that. We will adapt, we will function in the new world, whatever that looks like. But I really do feel like this is a lose-lose scenario for the market and for consumers. And we're just gonna have to make it work. But I want buyers to have great representation, whether it's me or Travis or Robin or Reed or whomever, you need it. And one of the great tragedies of real estate for many buyers is they don't know what they don't know until it's too late. And I don't want my clients to ever have that experience or for anyone to experience that because it's not fun. So with that being said, I'm going to hand it back to Reed and Robin because it's their show and we just crashed it. Guys, thanks for having us.
Yeah.
Thanks for coming. Yeah.
Thank you all for tuning in today. We know this is definitely a different style of video than what we've been doing, but this all came about from our weekly meetings, and we want to introduce you to the whole team. The team is not just Reed and Robin. We've been the ones who've kick-started this channel, but we've been wanting to get Dale and Travis here on the channel for a while. So we're really happy and we're thrilled that they joined us. And who knows, maybe we can make this a consistent thing. So go ahead, if you haven't already, subscribe, tap the bell so you're notified every time we put one of these videos out, and we'll see you next time.
Have a great summer.